Bitcoin and the altcoin markets are having a little bit of a tough time today. We're going to jump in and take a look at what the Bitcoin price action is doing, what the altcoin markets are looking like. I'm going to go ahead and share my screen here and show you a couple of things that I'm looking at. So one of the things is, as we've come to realize over the last year, most of us already knew it. Some people were not seeing the correlation. Bitcoin and altcoins are directly correlating to the stock market and are kind of tracking the stock market, especially Bitcoin. And a lot of the altcoins have the exact same price action as Bitcoin, but a new article out is showing that 43% of Bitcoin trading volume during the US market hours, that 43% of that volume is during US markets, and that for 2022, the trading volumes have trended up during US market hours, and that trading activity tends to be immediately pick up as the US stock market opens. And you can see that a lot of days when the markets open, you get big moves in Bitcoin and the altcoin markets. And when the markets close, they track really closely to the traditional markets. So let's take a look at Bitcoin here for a minute. This is the daily chart that we're looking at here. And one of the things that we can clearly see is from this March 2020 pandemic low of about $3,900, which nobody thought we'd get to after putting in an all-time high of 20,000. A lot of people didn't think it would get back down to 3,000, which it did after that. And most people didn't think it would ever get back to 3,800 again. But you could see kind of the trajectory here. After that 20,000, we kind of dropped off a little bit, went into this crypto winter, if you will, which is just basically a consolidation. But it was a good bit of time, basically from the peak of December 2017 to the low point in 2018, 2019, December, January. So that's almost a year's worth of consolidation. Had a lot of trading action, little bouncing around as we went along, but ultimately had that final capitulation, hit bottom, consolidated some more, and then back off to the races again. Had a little rejection, dipped back down. And then right in here, this is that February of 2020, January, February of 2020, where I believe the bull market was really trying to take off until the pandemic hit in March of 2020. And then all the markets capitulated. We hit that low. Everybody thought it was done. The Fed came out, rescued the markets, and then it was just straight up from there. We hit the first all-time high. Bitcoin hit its first all-time high after 20,000 right here at 40,000, immediate rejection. That was a significant drop right there of about 32%. And then it proceeded to hit the all-time high of 64,000 before we know what happened there, dropping down to 29 and then ultimately setting that new high at 69,000. And I'm an investor. I'm not a technical analyst. I'm not a chartist. I follow the analysis of others. I follow the other experts in the space that, they know technical analysis inside and out. They are the experts. I use the charts mainly to look at patterns and price action, because price action will tell you everything. Number one, there's the momentum of the market. You want to invest, doesn't matter what market it is, whether it's business, whether it's real estate, whether it's financial markets. And, I traditionally invest in real estate and companies and traditional financial markets over the years. I learned about crypto and Bitcoin back in 2015, 2016, didn't really do a whole lot with it. Played with it a little bit 2018, 2019, and then this past year, over this whole period from March 2020 on is when I've really jumped in and started really getting active in the markets. And I've been having a lot of fun with altcoins, as I've told you in my other videos. So anyways, what I look at is obviously trend. You want to trade with the trend. You want to be on the side of the momentum of the capital flow into the trends. And then the same thing on the downside. You want to watch the trend on the downside. Obviously, nobody knew this move was coming exactly like it did or what was going to happen afterwards. Right here at this 29,000 level, everything, all the technical analysis, all the charts, everything looked like we should have gone lower than that. And I thought we were going to, and I was wrong. We had an immediate rebound there right at that July low. And then we started a little bit of a distribution consolidation again with another bounce distribution across the top. And then we've had these little consolidations with little bounces, but this is all still distribution here. These were your consolidations here. distributing off of the top. This was distribution. This was a little consolidation to do more, get the market up to do more distribution and kind of get into that price discovery mode. A lot of people thought we'd see the $100,000 and beyond mark, and we got stopped out in the 60s, not quite to 70 yet. So the real question is, where are we going now, and what are we looking for in the near term? And last video, I brought up this death cross. A lot of people know about this. A lot of people have been talking about it. And what struck me about this, again, watching, again, I'm not a technical analyst. I just look at patterns and I look at price action and things like that. And what struck me as interesting was on the very peak of the market back in April of 2021 to the death cross, it was that 66 to 67 days, depending on where you measure it. Same thing here. If we go from the peak of the November 2021 to the death cross, again, 67 days, 66 days to that death cross, from the peak to the death cross, peak to the death cross. Really, really interesting how that worked out like that. And then if we go from the death cross to the bottom, that was 31 days. So what I pointed out was, if we're following this price action, which it kind of looks like we might be following this pattern a little bit, if we don't get a bounce here where we're at right now in this zone that we've consolidated over, we could be looking at a pattern of consolidation that plays out to a bottom, and then we get our retrace, and then we may go into a longer period of consolidation. We'll talk about that here in a second. But it's really interesting that if you take 31 days from January 14th and you go 31 days from there, that puts you out around February 14th of this year. And if you look at where we are right now, that's about 30 days from, well, not quite 30 days. Where we at today is the 19th. Yeah. So, another 3 weeks, 27 to 30 days from where we are now to get to that point. Let's go ahead and measure that out from today. Another February 14th is another 26 days from today. So we're getting very close if we're matching this type of thing. And again, price, it doesn't have to do anything, but it's just really interesting that we have the exact number of days from the peak to the death cross there, the exact number of days from the peak to the death cross here. So what you have to remember is a lot of the price action in the markets are driven by algorithms and trading bots, institutions that are doing automated trading. So that's why you see a lot of these similar patterns play out, because it's all based on algorithms. So if that's the case, we could very well see, more consolidation to the downside. And the question is, how far down could that go? And we kind of speculated that we could see another drop of about, if we look at the bottom of where the death cross hit here, that was right on basically June 19th. So if we take that, was about a 15% drop, right? So if we drop 14 to 15% from where we close today, let's assume we close here in the 40,000 range, which was kind of where we were in the last video. We're still hovering in the same thing. It's in that 35, 36 to 37,000 range right here in this consolidatory chop right there. So what are we really looking at right now, and what can we expect as we move forward? Get rid of that right there. This range here that we're stuck on right now has been historically, that's your market structure right there. So this historically was our first all-time high after 20,000. We got immediately rejected. That was a big rejection, 30-something% that we measured. Then we came back up and we bounced, rejected a couple of times before we dropped, came back up, had one little rejection, and then bounced right through it. Came back, had a little bit of a bounce there initially on the way down, had just a slight bounce, and then rejected a couple of times when we tried to rebound from that point. Had a rejection right here along the way, and then a lot of rejections here before breaking through. Now we're back in that same range again. So this is major market structure right here. What the market's trying to do, what the algorithms are trying to do, the market's trying to do, is see if there's enough interest to hold price here and continue on from there into a retrace before we get further consolidation, or are we just shaking out the last little bit, trying to get the last little bit of buyers in here from this little consolidation before further downside to where we find that bottom. If we're following this price action, we should find that bottom somewhere in that 35 to 37,000 range. And if we do that, and let's just say we find a bottom in that 35 to 37 range. Let's just go from 35.5-ish. And if we retrace from there to your typical Fibonacci retracement levels of the 618, actually, we need to do that we need to do that this way. I'm sorry. Like I said, I'm no technical analyst, but let's see what happens here if we retrace from the peak down to about 35.5. The 618 to the 702 would be in that $56,000 to $60,000 range. So that could be a nice little retracement where the altcoins will go wild, and that will trigger altcoin season while Bitcoin is retracing into that 618 to 702 range, could even go up to the 786. And if we clear 786, then we could be off to a new all-time high. So those are your levels that you'd be looking at. So if we do consolidate more and drop down to that 35, and this could be, I don't think we're going to see 29,000 again, but we might. But potentially we could look for the retrace bounce in that $35,000, $36,000, $37,000 range, and then retrace back up to these levels. If we bust through the 786, that 62.5, we may be off to a new all-time high. If we get rejected in those areas and turn back, then that should trigger the beginning of more of a longer term downtrend consolidation phase. And why are we looking at that? And a lot of that is because of what's going on in the markets. As you know, the Fed has had to pull back on quantitative easing. They've had to raise interest rates, and they're going to have to significantly raise rates, probably more than 4 times going into next year. That's why we are in risk-off mode right now. The Fed has sent the signal that it's time to de-risk, that they are not going to be as accommodative. They're not going to be giving, this low interest rate, easy monetary policy. They're not going to be propping up markets right now. Depending on how far the markets contract and how low they go, will determine how active the Fed will get. They're kind of in between a rock and a hard place. They can't do but so much because the government needs to borrow money to keep operating. And if they raise rates too high, well, the government will not be able to do that. So they're kind of stuck to a certain degree there. So I don't think we'll see rates get too out of control. But the liquidity flow is the big issue because, again, the markets are basically on the same track. When you look at the Dow Jones, it's been on the same track since March as Bitcoin. When you look at NASDAQ, the same thing, just basically straight up. The S&P basically straight up. What does everything have in common? Everything topped right here around January 5th. S&P topped December 28th is when the NASDAQ started its downtrend. It topped back in November. And Dow Jones right here in, around January. S&P, NASDAQ and S&P and Dow Jones are a little bit closer in terms of their top. And Bitcoin, as we know, topped out back here in November with the NASDAQ. So what is Bitcoin acting like right now in terms of traditional markets? What is it closely tracking? NASDAQ versus S&P, there's been correlations to each, but at the end of the day, it's kind of tracking with the market. So as we talked about when we opened up, when markets open, the price action of Bitcoin, price action of altcoin markets. And if you look at the price action across a lot of these assets, they all look very, very similar, especially to Bitcoin. Some of these are a little bit different, some of the younger coins, but some of the older coins are kind of tracking the price action to Bitcoin very closely in terms of what's going on. And the real question is, when Bitcoin does retrace, are these altcoins going to be off to the races like they were back in 2018 after the retracement, during the retracement there? A lot of these coins have set some serious highs. So the question is, how far are they going to go? Are they going to all go back and set new all-time highs? Or are they going to retrace a little bit like Bitcoin? Traditionally, they would go on to set new all-time highs, but a lot of them already have. A lot of them have already run, like Solana. We've already seen huge numbers with Solana, big extensions. Avalanche, we saw big extensions. So, a lot of these coins have already run, whereas last time they all ran. Everything ran at the same time. So there's a lot more coins now. There's a lot more other areas that the capital is flowing into with NFTs, with DeFi, the metaverse, plays like that. So it'll be interesting to see what the altcoin season looks like after this next retracement of Bitcoin once we figure out our bottom here and we start retracing again back to that, $55,000 to $60,000 level, which is a great little retracement. That'll be basically doubling your money, a 2x from that standpoint. If Bitcoin does do that, and if it's down in the low to mid 30s and gets up there, I mean, that's 80%. Some of these altcoins should 2, 3, 4x along the same time. Some might 10x depending on which ones you're looking at. So it'll be interesting to see how those things play out, what the retracement looks like, what the altcoin markets do during that time frame. So keep an eye on traditional markets. Bitcoin altcoin markets are following traditional markets. It's risk off. Everybody's divesting themselves of risk assets. They're doing it slowly so that they don't create panic and don't lose all the opportunity to unload and unload their bags on the retail buyers out there that are buying the dips. So be very careful. It's very difficult to trade in a downtrend. If you're a long-term holder and you can wait it out, then you don't have anything to worry about. If you're trying to trade, it's very difficult or a lot harder to trade on the downtrends than it is trading in an up market, because you just never know where the bottom is going to be, and you never know when it's just going to keep going. And we could see that with the markets. You never know when all of a sudden you're going to get a big sell-off and you don't get a rebound. And then on the topic of a crypto winter, if Bitcoin does retrace and the altcoin markets go off, are we going to see a big crypto winter, meaning a big down market like we've seen in the past of years and years of consolidation, things like that? I don't think we'll see that. I think if markets sell off and we reach back towards these lows prior to the run in 2020 after the March capitulation, if we get back to some of those lows again where the bull markets began, I think you'll see it start all over again. So we could be in a new environment for Bitcoin and cryptos where it's more of these peaks and valleys and periods of runs and spikes and periods of consolidation versus just a long, down bear market crypto winter. So we may not be seeing that anymore with the adoption that we have now, more retail involvement, more institutions getting involved, more companies every day getting involved in crypto, in DeFi, in metaverse, in gaming, those types of things. So more and more adoption, more and more involvement by the general population, companies, institutions, should level out the markets a little bit and eliminate some of those huge peaks and valleys and long-term downtrends. So those are the things that I'm looking at. Again, I'm not a technical analyst. I'm not a chartist. I'm an investor. I invest in companies, real estate, financial markets, financial assets. And I study, the macro environment. I study price action, and I study all of the fundamentals and the narratives out there that can affect price. Just like today, we saw Bitcoin pop a little bit, and that was probably because Google was making some announcements about crypto plays and things like that. So you want to keep an eye on what's going on out there. If you're a long-term holder and you don't care, then you can just sit back, relax, and ride it out and see where it goes. Nobody knows where the tops will be. Nobody knows how far Bitcoin will go. Will it hit 100? Will it hit 300? Will it hit 500? Nobody knows. How low will it go? We don't know, but we have a good idea that there is a solid case that 29 may be the floor, 29.30 from a sustained downtrend, unless we get a big market situation like we had back in 2020. And we saw the market go down to $3,800, $3,900. So you have to be able to understand and reasonably expect that if we get a bad stock market situation, a bad economic event, that obviously Bitcoin could go back to those levels again. And so could all of the altcoins. If Bitcoin goes down 10, 20, 30%, altcoins are going to go down 2 to 3 times as much. So just keep an eye on that. Be careful. And do not try to catch those falling knives. And I will see you on the next video.